If you're sick of knowing about infinite banking and you're ready to get started, this is the episode for you. Welcome back to the Cash Compound Podcast. I'm Jay Dew.
And I'm Jonah.
And we are going to walk and talk you through the save and spend system, but it's not just the beginning anymore, Jonah. It's getting people started. And I think that's what people really want.
I think so too. A lot of people need to know how to use their policy once they get started. I think that's a big thing. They've heard it, they've watched it, they've seen it, they've read about it, they watched other people do it, but they don't know how they can put it into practice for themselves.
Let's talk about a conversation I just had yesterday with someone who called in. They saw us on some of our social channels out there. Don't forget to like and subscribe right here on our podcast or YouTube for those of you who are viewing us, but we're doing a little bit on the other socials, the weird ones, like TikTok, Instagram. And I talked to a guy, he's in Florida, and he had policies. And what I've started to learn is there are people out there who think they're into the game of infinite banking, but they really just have policies. Infinite banking is something you do.
That's what you mean. They're not banking with their policy. They own a policy, but they don't know how to use it.
Yes. So this young gentleman here, we are going to avoid saying his name, of course.
Sure.
We got to protect the wealthy. However, what he realized is his two life insurance policies that he bought, one 2 years ago, 2022, and one this year in 2024, they were not necessarily set up the way he thought they could and should be for use.
Yep.
That's a big deal. Yeah, that is a really big deal. So we had a long conversation where, first off, he went to go get his illustration paperwork, log in. I was trying to walk and talk him through. And I said, hey, did the person who set you up with these policies, did they help you do any of this? He's like, no. Now, I said to them, I wanted an infinite banking policy. And they said, sure, we can put that together. Now, 2 years for one policy and at least 2 months for another policy. Later, he was like, I don't really know how to use it or what to do, or if they're like, is there a difference? Can you set them up different ways or something? Because now they're telling me, like, I can't get money from it. And isn't that kind of the point? I want to build my system like the Rockefellers.
I've heard that a few times. Couple of ways that people are being kind of duped into infinite banking policies, and then they go to use their policy, they can't get any money out.
Right.
And I would say that then that's not an infinite banking policy, if you're asking me, but
there you go.
My 2 cents.
So we walked and talked through that a little bit, and I helped him out. It was all in one day. I said, what you're looking for, you can call insurance companies or your agents and get to this information. Within the day, we did, and we walked and talked through. We went through a Zoom one-on-one, and I said, oh, well, there are 3 things that you want in your infinite banking system here to have the policy for becoming your own banker. And number one, you want to utilize a mutual company, a mutual insurance company. One of his policies was not from a mutual insurance company, so there were no dividends.
No dividends on that.
No dividends. Number 2, what do you want to buy from a mutual insurance company?
Whole life insurance.
Well, one of those policies was not, and then the other policy was not either.
Oh, no. Not a mutual company on at least one of the policies, but then not having whole life?
No.
Uh-oh, we're 0 for 2. We're not doing very well.
And number 3 is the policy needs to have designations from the jump, from the get-go, for cash use.
Yep.
Okay, so mutual insurance company that pays dividends, or you can participate in, for those of you who know the jargon. Number 2, what are we buying from this company? A-rated, 100 years old, and all that's a Comdex score above the 90s.
Yep.
Number 2, we buy whole life from them.
Right.
So we have all the guarantees.
Whole life.
And number 3 was, well, then we got to make sure it was set up so you can get some cash and use it and lose it, abuse it, whatever you want to do. And he was 0 for 3.
He was? Man.
Well, weren't set up that way because it wasn't whole life.
He thought he was doing all right. He wasn't doing so well.
Yep.
But here's the cool part. If you're in a position where you feel like you need to start or talk to someone about infinite banking or even your existing policies, because you want to make sure that you have policies now, but you want to make sure they're set up the right way, then what you need to know is that we can absolutely help you, and we want to. So this is something that we do all the time. We jump in and we say, hey, send me the current policy that you have, that you bought 2 years ago, 3 years ago, 4 years ago. So that way we can review it with you and see if this is actually what you want. And you would be surprised at how many times we do things like that and it's not what they wanted. Not even close.
Oh, right.
And it happens pretty quick is funny too. Like 2 minutes into the conversation, they send it over. You read the first page, you're
Right.
like, this isn't it, man.
Well, you got. I mean, we're experts in this, right? You know what it takes to be an expert?
10,000 hours is what it takes, according to Malcolm Gladwell.
There you go. And or 5 books. Read 5 books on the subject.
Oh, really?
Have you got your 5 books in?
I think so.
Yeah, I mean, I have. So, like, we know what we're looking for.
What if
It's
you
not
read the
that
same book 5 times? Does that count?
I doubt it. But Bruce Lee says, I fear not the man who has practiced 10,000 kicks one time. I fear the man who's practiced one kick 10,000 times.
That's a good quote.
So keep
actually.
reading that same
If
book.
He did kick me. That would be tough.
It's over.
Yeah. Anyway, here's what I think would be really cool for us to do here on this episode. I want to talk just a little bit about using your policy.
Okay.
And just in case the folks out there don't realize, when we're talking about this, everything comes from this black book that's in my hand here. It's the Becoming Your Own Banker 5th edition. And specifically on page 51 is where this book starts jumping into policy use. Right? It's the equipment financing examples where it starts walking through using the policy. Now, the example that they give us in the book is a gentleman that's just using his policy to buy tractors.
It was Nelson's, actually, in real life, it was Nelson's nephew, I think.
Was it? Cool.
And he had logging trucks.
Logging trucks. That's what
yes.
I was getting confused. Logging trucks that he was purchasing, and how cool and how much better the policy performs if you use it. But that's what a lot of people struggle with. They go, I don't know how to use it appropriately, right? And it's funny actually how many people get close to that time where they're ready to use it and they start asking really easy or easy to explain, if you know, questions. Like, how do I actually take a loan? Or is it the insurance company have a website? And I'm like, yeah, they do.
People start, the funny thing about it is, as soon as we mix something that people know, which is life insurance, they know you give them some premium and they give you some coverage, right? And then we connect that dot to banking, something they also know but don't ever think about and don't practice personally. We combine them, and all of a sudden, they wonder if the company has a website. And you're like, what? Yeah, the company has a website.
Of course they have a website, right?
Yeah, well, how do I contact these mysterious people? Call the number?
Yeah.
Google it? I mean, I will tell you, but we're not trying to make fun of anyone in particular. We're trying to make fun of everyone. Yes, they have a website, people. Okay, we can call customer service and we can use our policies.
That's
yes,
right.
Very good. Okay, so Jonah, you mentioned something very interesting, and I think we can take a look here on my board. You guys can take a look at this. Becoming your own banker. Jonah, what I want to help, and before we get into the technical, because you do the technical, and I'll give you a proper introduction on why you're so good at it, is it's broken up into these 3 parts: becoming your own and banker. 1 and 2 and 3. Becoming, that means we have some progressivism.
Yep.
We're on our way. We're not there yet. It's okay to start from the beginning and where you are. Becoming your own banker doesn't mean you're already were a banker. It means you're becoming. And then number 2, your own. We can't do everything for you. We can tell you you can do anything, but you can't do everything. You got to figure out your own path.
That's right.
Okay, so what is it that you want to do? Lots of people want to pay off debt.
That's right.
Probably talk about that in a little bit. You have a lot of experience there. Number 2, people want to get into investing. People want to also buy some big product or purchase, or they're saving up for something like a school bill or a wedding or something like that. So your own,
kids.
okay, becoming your own. And then number 3 is banker. We just detailed someone who bought life insurance policies, knew that they might be able to borrow against them, use some of that cash, but that's not banking. That is borrowing against a life insurance policy. Banking involves some action.
That's right.
A lot of action.
Yep.
And I want to own big banks. So I think I better write some of this down and get pretty detailed. So that's what we help people with. Jonah, take us back and walk us through your credentials. You're very good at this because over the course of the last 6-7 years, you have actually been on the phone with hundreds, if not thousands of people. I don't know if you kept track. Help us understand what needs to happen once someone starts and how you've been helping people.
Yeah, I did not keep track because it was too many. So yeah, about 6 or 7 years ago, I was asked to basically make this becoming your own banker my full-time gig. And what that entailed was getting on the phone, getting on video calls, talking to people, and walking them through how they can use their infinite banking policies specifically to accomplish their goals. Right? And so that's what I started to do. And that involves lots of things. That involves spreadsheets, that involves charts, that involves graphs, that involves conversation, that involves updates, that involves changes things. And so what has happened is over time that I've almost helped anyone with anything you can think of. Meaning, you can't fool me. You can't trick me. It doesn't matter if we're saving for college, saving for weddings, need to buy cars, need to flip houses, need to buy houses, need to sell houses, need to save for retirement, need to get out of a different retirement. It doesn't matter, right? I can walk you through it and I can help you. And so what we've done is we've created this entire implementation category for people who get started with infinite banking policies, because what we realize is a lot of people can understand enough to get started, but not a lot of people know how to put it into practice. And that's what they need the most help with, putting their infinite banking policy, getting it out of their mind and getting it on paper, so to speak, right? If that makes any sense. Getting it out of theory and putting it into practice. And so that's what we walk and talk and help people through. And that's what we kind of want to jump into in this episode.
Yeah, so what happens when you start with us at the Cash Compound is we're going to have a customized and complementary coaching system for you. You're going to be able to tell us, this is what's next on my financial future agenda. I want to be prepared for taxes coming up. I don't think a lot of people actually think about taxes.
You should, because they are the worst.
You should. They are the worst. My goodness. All right, so what happens here is we can start to plan for utilizing our policies to be able to not let the money completely disappear from our family and go to the IRS, but to be able to borrow against your policies to pay your taxes and then recoup and recapture the dollars that normally leave.
Yep.
If you do that from your, like Dave Ramsey told me, if you just do that from your cash, your stash of cash, then it's going to be gone.
Right.
But if you use your policy and put that one piece in between you and the IRS, you're actually going to be able to get it back.
Yep. And get more back on top of it. And that's what makes it really cool. So again, if you're familiar with the Becoming Your Own Banker book, what you want to look at to understand this a little better is page 51, or at least it starts on page 51. It is the equipment financing examples. And the whole point of the equipment financing example is to show you that if you use your policy like a bank, that your policy grows. And I don't want to mince words here. When I say policy grows, I mean you have more cash. You have more money. And that's what a lot of us are shooting for, right? I need more cash. I want more money. I need to do bigger and better things. You know, they're coming out with cars. They're getting more expensive. They're getting cooler. And they're getting more expensive. So I need to be able to buy them. I need to be able to send the kids to school, send them to college, pay for the weddings, retire, whatever it is. You've got to use your policy to have more. It's a really funny concept, right? But think about it in terms of like this. Any conventional bank that you're familiar with, that you're aware of, right? How much money does that bank make if they don't use any of the money that's dropped off there?
They don't. It's not their money that's inside those vaults.
No, they wouldn't make a dime. Now, how much money do they make? And all they do is start passing out money, passing out loans for houses, for cars, for boats, for fences in the backyard to redo the kitchen. They just start moving the money like crazy, and they start making lots and lots and lots of extra for themselves. And that's the key. It's a funny first step. You want more money? Use what you've got, right? But it doesn't work if you're not in the right vehicle. Because like you mentioned, if you just use all your cash and the cash is just gone, it's not coming back to you, right? You got to work harder.
Yeah.
But if you've got the right vehicle, it starts with the action step of using it, but it doesn't finish there. It finishes with being a banker and repaying it.
There we
go. What happens when you do?
There we go. Let's take a look at another example here that we put together. It's in our general save and spend system video. So everyone has access to this. This is a free gift to you that overviews not just what it is, the product or which company, but actually how a real life person can use it. Jonah, tell us a little bit about this. We don't have to get into the details, but I did want to have people see visually, if you're following us in a visual format here, this platform is a place here at the Cash Compound. The Cash Compound platform is a place where we'll actually customize this experience for you. So lots of people come to you with debt, right? And we actually get pretty aggressive and let people know, hey, if you got debt, you're losing 20, 30% to third parties. Why don't we chart yours out here? So help people kind of see, just tell us right here, what are we looking at right here?
So this is actually just an example of someone who got started with their very first infinite banking policy, and they were really interested in paying off debt. So what we did is we created a debt payoff plan for them.
Really?
But on the screen currently, what we're looking at is their debts that they had when they walked in the door with us. So this is what they've, they already racked up and they already had by the time they walked in. So we've got a Visa card, a Discover card, the dentist, Home Depot, Best Buy, Apple, rooms to go. They had a car, they were driving a Mercedes, and they had a house. And then what we like to do is we like to summarize exactly the parameters around each and every one of those debts that you tell us that you want to get rid of, right? So for instance, the very first one, the Visa card, he owed about $2,900 on that Visa card, and they were charging him a minimum payment of $75 a month. They were charging him 23% interest, which is wild. It's so high these days.
Right.
And he would have that debt for 74 more months if he decided that he was just going to keep giving him $75, right? What they wanted to. Now, again, he wants to pay off debt, so you've got options. You've got the option to use your cash to pay off the debt.
100%.
Right? You make income, you use your money.
Don't have to do infinite banking. You can just pay off your cash. Pay off your debt with your cash.
But here's the problem. This gentleman had $434,000 worth of debt. So not only will it probably take you a little bit of time to have income equal $434,000 debt, and because of the time, there's going to be interest added onto that total.
Right.
But the second thing is you finally make your $434,000 worth of debt, and you gave it all away.
Now, here's the thing, Jonah. I didn't know that there was any alternative.
Sure.
I thought that, so explain to us how, kind of technically in a policy, we're not going to give our money away by paying off our debt. Help us understand that.
This is a question that I get asked almost every day. We were speaking at our local Real Estate Investors Association last night. Gentleman asked that question.
Yeah.
I've been on the phone a little bit this morning following up with some folks. Somebody else asked the question. Now I'm shooting the podcast. We're getting the question, right?
We're getting it all the time.
Now here's what's going on. When you borrow money, so I've already said it. I said the word borrow.
Okay.
When you borrow money from your life insurance policy, specifically whole life designated as an infinite banking policy, what you are doing is you are taking a prepayment of the death benefit. Technically, by definition, a prepayment of the death benefit. Now let's stop there because I've said a lot of words.
Yep.
One, if you called in or logged in online to ask for this money, they know that you are not dead.
Because you called.
Or you logged in and it's you. Right?
Yeah.
Does it make sense? Okay, cool. So they are not obligated to give you death benefit money.
You ain't dead.
If you ain't dead.
All right.
So if they are going to allow you to have some of that death benefit money, it is a prepayment.
There you go.
By definition, that means it ain't yours yet. And if it ain't yours yet, it's not a withdrawal, it's a loan.
It's a loan.
Okay?
You now have a lien against the death benefit because one day you are going to die and they already gave you the money.
There you go. So it's not a withdrawal. That's very important because you are depositing or paying money into the policy to have the policy in its entirety. And so a withdrawal would be a direct subtraction from that money that you've paid in. But that's not what we've done.
There we go.
What we've done is we've taken a loan from the life insurance company. I've got a lien against the future value of my death benefit. They prepaid it to me early, and now I've got access to use that money. And so when I use that money, one of my favorite things in the world is there's no subtraction, minimization, diminishing account value, presence, loss of benefits, nothing on anything that I put in the policy. I didn't take that money.
I think a lot of people need to understand that. When we leverage our life insurance policy, we didn't lose the policy.
Nope.
We didn't lose the benefits associated with that.
There's literally not one thing was lost. Not one thing happened.
Right.
Besides, hey, can I have some of that death benefit? And they're like, sure, you can have some. We're going to subtract it from the death benefit. And I'm like, yeah, that's what I asked for. That's where it was coming from.
You owe me all that money.
Right.
So we're going to take it early.
There you go.
And we're going to get out of maybe this 23% crazy credit card.
So here's what's fun, right? Now you've got the same example we were just looking at, $434,000 worth of debt. But now we've got two options. Do I work really hard, make a bunch of money, and then straight up give the Visa people, the Discover Card people, the mortgage people my $434,000 of hard-earned money? Or do I make a bunch of money and put it into an insurance policy that guarantees it to be there and still use cash value, insurance company, prepayment of death benefit to pay off all the debts?
Let's go.
Right? There's a humongous difference. One of them, I'm fighting. I saved up really, really far, and then I'm just going to go back to zero.
Right.
And the other one, I saved up a bunch. I put it in the policy. I've still got it, and then they give me some other money to use. I didn't go backward for a moment, right? For a moment, I used the death benefit from the policy. So that's what makes using your policy so unique. And that's what a lot of people struggle to understand. They go, well, hold on. I could go a little bit faster if I use my cash.
You could.
And that's true. But then you just used all your cash.
Right.
So if you go a little bit faster than me because you used all your cash, I go a little bit slower than you because I use life insurance, cash value. But at the end of the equation, when all the debts are paid off, you're at zero, and I still have my $434,000. Who's winning now?
Let's go.
Right?
All right.
That's
It's not
what
a
people
competition,
miss.
though.
It's not, but
It's not.
people miss it, and it's
Okay.
it's important to
Well,
know.
you getting going there for a second. Here's another example. Jonah, a lot of people out there that we service and we help. You mentioned last night, we did speak at our local RIA.
That's right.
And some people aren't talking about debt, thinking about debt. They're thinking about investment opportunities. They're thinking about having a liquid pool of capital to get into something special.
Yep.
Not get out of something bad, but get into maybe a fix and flip, maybe a rental, maybe a midterm deal. Tell us, can we help? Do we help? Do you have expertise at helping people use a policy contract for real estate?
You better believe it. So here's an example of something that we recently did in our town. So you can, if you're watching on YouTube, you can kind of see the summary page that we're throwing up here. If you're just listening to us, let me explain it to you. This is a opportunity to be a private investor, a private lender to a gentleman in town who wanted to flip a house. Now, he originally asked for $100,000, and his plan was to pay it back very quickly, within 90 days. And he said, hey, if I pay it back within 90 days, I'll give you $3,750, kind of like a minimum payment, right?
There you
Minimum requirement.
Yep.
But just in case that I need to go longer than 90 days, this contract's going to go for a year, and I'll pay you 15% or $15,000.
There we go.
And so that's what we decided to jump into when it was presented to us. Oh, my goodness. Sure. It's, again, it was safe. It was in our town. We knew the individual. It was first lien position. What that means for all of you who don't do any private lending is that if the contract is not fulfilled, if we don't get the money back, we're going to own the property, right? And so for us, let's do it, right? Either we get paid all the money back, which is awesome. It's a pretty good return, whether it happens really quick or whether it happens over a year. And if we don't, we're going to inherit a property in our town that we can manage or put up for sale or whatnot.
There we go.
That makes sense? So we decided to do it. But let's break it down the way that we've kind of done with our debt purchase. Right? Should we do it with cash, or should we do it with our policy loan? So again, for all of those who are listening, let me tell you what happens if you do it with cash. Well, as promised, the deal would be 15%. It's a 15% yield on $100,000. So that's $15,000. Everybody gets that. If he holds the money for a year, we make 15. But of course, you're going to have to pay taxes on that 15, right?
That is not, this doesn't have anything to do with the policy.
Nothing
Sometimes
to
we
do
have
with
to
the policy.
separate this
Right.
in people's minds. What we've done at this point is we've decided to think about doing an investment, and an investment is not insurance.
That's right.
This is a separate deal.
And
Sometimes people conflate them together.
This
Whoa,
is specifically
separate.
talking about, well, what if you take the same investment? Because the investment's not specific to only people with life insurance policies
Correct.
to do the investment.
Right.
That's not true.
Right.
That's not how that works. You could do the investment too. But if you do the investment and it's coming from cash, you're going to earn 15%. That was the deal. And then you're going to have to pay taxes.
Yes.
So let's assume a tax bracket of 30%, or at least 30% on the money that you just showed up.
Yeah.
So 30% of 15,000 is $4,500. You pay that in taxes. You have to. And what that means is you're going to make $10,500.
Yeah.
Right? Because the rest of it had to go to pay taxes.
Mm-hmm.
But here's how we did it and how we would encourage you to do it using your policy. See, the first thing you're going to do is borrow the cash value, meaning that any deposits you've put into the policy are still there.
There we
Just
go.
in case the deal goes south, you didn't lose your money, did you?
Nope.
Because you borrowed cash value. Then when you borrow cash value, you actually get to be the banker. Think about borrowing money from a traditional bank account. As soon as you ask for the money, they're going to put a bunch of paperwork in front of you that makes you sign on the dotted line that says you have to repay it, right?
Credit check, give up your kids.
There you go.
Pay stubs.
Right. And just in case they still don't want you to do it, turn in more paperwork. Go back 6 years now instead of 5. It's ridiculous, right? But when you borrow from your policy, none of that happens. But we encourage you to still be a banker, which means set your own interest rate. And so we did. It's about 8% is what we set. Again, this is arbitrary, 8%. We made it up, but that's what we wanted to do.
Right.
So then we make the same $15,000 that you make, because that's the deal that we did outside of now our life insurance. That's the investment opportunity. We made it too. But we get to repay our policy $8,000, 8%.
There we go.
What that means to the government is that we did not make $15,000 and therefore have to pay taxes on $15,000.
It's very important to understand, folks.
So even if we have to pay 30% taxes, the same as you, we actually get to pay those taxes for a total of $2,100 because we got to subtract $8,000 from that $15,000. We only have to pay on $7,000. Which means that sure, in the deal, technically adding the taxes, we made $4,900, but since we kept the other $8,000 in our policy, we cleared $12,900 on the same investment that you cleared $10,500. All because of where the money came from, as opposed to just using the cash.
It's very important to understand, ladies and gentlemen. We will walk and talk you through this one-on-one, custom and complimentary. We have group coaching and we've got solo cash consultants. All of us here, all of our coaches, Joan and I included, do this stuff personally. The example that you just saw with that particular house and investment is something that we did.
That's right.
So we're going to help you do that as well. It doesn't matter if your goals are not the same numbers as ours. It doesn't matter if your policy is not the size of ours. Yours may be twice as big, but we're going to help you on your progressive path to becoming your own, teach you how to do this, banker. Not just buy life insurance.
That's right.
But to actually utilize your own numbers and your own ledger and your own goals and your own timeline to get out of the financial failure you may not know that you're in. And you can completely clear it and jump those hurdles by becoming a banker. So we want to encourage you. If you want to do this process, then you should get a coach to walk and talk you through it.
That's right.
Let's go practice it a while. Let's get your debts. We have a whole system to actually get your debts from you, fill out a little form, and then we will package it together
Just
for
like we
you
showed
in
a
a
debt
way
payoff plan for
that
you.
we
Yep.
can get you out of this debt utilizing your policies. I don't think a lot of folks know really how powerful banking really is and how much they can control and grow their wealth by doing it.
That's right.
So that's what we wanted to help you guys understand. It's a whole system here. It's a part of what we do when we team up and we help you with your life insurance. So many folks, just like yesterday, want to talk about their policy that they have, but they're not quite a banker yet. And that's what we want to help you guys do. So it's a part of our whole implementation program. If you want help like that, let us know. Shout out to somebody out there on YouTube land. I think we've got a fan follow of the week. I think this is our next banker coming up.
There we go.
We'll see.
So big shout out to Steve Smith. He is on YouTube. He just subscribed to our channel. We appreciate that, Steve. Steve, if you're watching this video, give us a shout out in the comments, right? And ask a question, get on our calendar. We'd be more than happy to talk to you. But we really do appreciate this subscription there. Hopefully you're learning a little bit. Tell us if you want us to talk about a specific topic. We'd be more than happy to jump into that for you, help you understand. But big shout out to Steve.
What's the next thing that you want to do as a banker, ladies and gentlemen? Don't ask us about life insurance right here. Tell us about your banking opportunities. What is it that you're going to tackle, and what is it that you need help with that we can coach on? We'll see those in the comments, and we will talk to you about becoming your own banker very soon.
You are now tuned to the banking bros. Said we couldn't make it, 3 cups settled, this the life we chose. Gave a lot